Greetings, I'm Andrew Ludwig, and welcome to Black Onyx, Alternative Investments, where we bring you face-to-face with South Africa's most talented boutique asset managers and industry stakeholders. Why do we do this? Because we believe that you, the investor, deserve to be better informed in order to achieve the best risk-adjusted returns. Today, we're meeting Leon Allison. Leon, thank you very much for joining us today. Could you tell us a little bit about yourself and how you got into alternative investments?
I started in the investment industry. I joined HSB Securities as a research analyst on the sell side. I covered several equity sectors, mainly on the industrial side. I later joined Australian investment bank Macquarie, where I started focusing on the real estate sector. Both South African real estate investment trusts, REITs, as well as some foreign property companies. Through my research in listed property and by extension bonds, I felt that there was perhaps an opportunity for a hedge fund with a yield bias, basically going long, selective quality property companies, and on the short side, funding it with long bonds, as a tax efficient way for tax sensitive investors like high net worth individuals to get geared yet hedged exposure to listed property. So I wasn't aware of any products like that in the market. I did it myself, and it worked quite well. Now, as one of my clients, Peregrine Capital, I serviced them for many years. I got to know David Fraser, Toby Lochner, and Justin Cousins quite well. I really rated the team. I mean, their track record speaks for itself. I felt they were very like-minded, and there's a good culture fit with them. And as a result, I shared my ideas with Toby, and he bought into it. I think one of several strategies, the Peregrine Capital Fund, we're doing something similar as well. So after many years in the investment banking industry, I joined Peregrine Capital in November 2015. And Toby and I are co-portfolio managers, but importantly, we leverage off the whole team's expertise, which I think is very valuable.
Leon, please give us a bit of detail on Peregrine Capital, a bit about the firm and some of the strategies that you guys represent.
Peregrine Capital is the longest running hedge fund business in South Africa. It was founded in 1998 by Clive Nates and David Fraser. Focus is not on growing assets, but it's really on performance. Our investment philosophy is bottom-up stock picking, and really we really want to get to know companies well, the industries we're invested in. Many of the companies we've got long-standing relationships, with management. So that's really our focus. Also to we strive to achieve positive returns, but at the same time maintain capital stability. Once again, I think the track record of the funds long-term reflects that, and also at lower risk, lower volatility than the overall market.
Please give me your definition of a hedge fund and an explanation on short selling and some detail about other ways in which you manage the downside protection and manage these alternative strategies.
I think the main difference to a long-only fund is we can go both long and short. On the short side, it's generally done to reduce our downside risk and also to provide gearing. I mean, short selling is selling stock or securities that we don't own, as we expect the share prices to decline, and at a later date to buy back and make a profit in that way. So as an example, in our fund, we would go, as I mentioned earlier, long property stocks, say, yielding 3 to 4% and growing by double digits. Whereas on the short side, we would go short government bonds, where there is a low fixed income cost of about 1 to 2%. And over time, we would expect the higher yield and growth to exceed the low fixed income cost. And also, if there's yield shift, if interest rates or yields rose, that could potentially be negative for listed property. But at the same time, one would expect that to be negative for fixed income bonds as well. So in that way, if our long position comes under pressure, similarly the short position would probably take us into a profit position.
How is your fund different from other mainstream investments and other alternatives out there?
The main difference with mainstream products, long-only funds, would be that we can go short as well, so protecting or hedging our downside and also providing gearing. I would say difference to both mainstream and also some alternative investments or hedge funds would probably be composition. On the long end, and this is at present, it can change. At the long end, we've got significant exposure to pref shares and then also to high growth listed property. And, that at the moment, a significant portion of that is foreign property stocks. And they're not necessarily the big household names, but niche companies that we know quite well. And then we also have exposure to general equities, non-real estate equities that offer both decent yields and growth, and then opportunistically some high yield corporate bond exposure as well. So I would say it's mainly in that kind of composition, which I don't think is common, or I haven't really seen elsewhere. On the short side, as I mentioned earlier, we'll be short government bonds, and then also at present some SA REITs, as we think they're quite expensive and the property fundamentals are quite weak. So really, it's not a fixed income fund. We offer growth as well, but it's not a pure equity or growth fund, as we offer above average yields. So it's kind of in between, it's like a hybrid of the two. And if you look at the correlations, we have low correlation so far relative to the market, low correlation to bonds, low correlation to property, or at least SA property. So you would think that it should provide good diversification benefits as a result. And then we're also still a small fund, small and nimble, so we can move into and out of assets and even fairly illiquid positions, which of course large funds can't do. And that just increases our potential investment universe. And then I also think, very importantly, as fund managers, we are invested in our own funds. And so there is proper alignment with our external investors.